embarrassed. She doesn't really do anything. What Mary Ellen actually does, Mary Ellen joined the group. She got active. She not only joined the group and got active, but then she started bringing people on a regular basis. She became a committee person in Northampton County with the party that she's affiliated with. She goes knocking on doors and volunteers her time that way and getting out information for our candidates. She volunteers, as you saw at the table back here. It's nonstop. Mary Ellen every day will look through the newspapers and post relevant articles on her Facebook page and keep people updated on what's happening. All of that is Mary Ellen, and that's all one person. Now imagine if each one of us did just one article a day or knocked on 3 doors a day. We could have a room full of Mary Ellens, but right now we have one Mary Ellen. Otto does nothing also. Otto has been coming to the meetings every month for how long, Otto? About 2 years?
About that.
About 2 years. But not just come to the meetings. Otto also manages the Commentator, the conservative Lehigh Valley Commentator newspaper magazine. He always brings copies and gives them out as free samples every month. He offers deals to the Lehigh Valley to help generate revenue. And he's been this year he's been very, or just last year, he was very influential in bringing to light a situation in the East Penn School District with the asbestos burial. So Otto, we'd like to recognize you as well. Thank you. Now there's one more. On the board, we talked amongst ourselves, and not everybody was part of the conversation. We wanted to pick one person on the board who also goes above and beyond. This person was unanimously decided on without even throwing out names. People suggested this on their own. And this person has been very active in just about every aspect of the executive board, almost every meeting. I don't think he's missed a single meeting. He chairs a separate committee. He also is very active politically with other organizations. He has taken over anything we've asked him to take over and does it without complaining and without arguing. Tom Campione, please come on. We got him this piece of styrofoam. With that, I'd like to introduce our guests, whose name I'm going to butcher for about the 12th time. District Representative Tom Caltagirone and Richard Shuker.
First of all, I want to thank you all for coming out, especially after New Year's. How many of you have heard that there's a pension problem? Who do they blame it on? They blame it on the legislators, underfunding. Right? They blame it on the pensions are too large. But has the pension funds ever been audited? The answer is yes. And this is part of what this meeting's about. There was an audit done on the SCRS and the PSDRS pension by Auditor General Jack Wagner in 2006. And in 2006, he gave 36 recommendations that the pensions needed to do so they would not have a financial crisis in 2012 or 13. Do we have a crisis today? He hit it right on the head. Not only did Jack Wagner write up reports on this, but also the Independent Fiduciary Service Incorporated, who actually checked Jack Wagner's work, recommended 44 recommendations. Guess how many of them were followed? This is the actual report. It's 323 pages. All the blue tags on the side is recommendations. Now what's interesting about this report has been given out at that time, remember right, 23 individuals, which included the governor, the auditor general, the attorney general. It went to 18 House members, 9 on each side. Tom, when did you get a copy of this? Never. It was never distributed. And the reason for that is some of the responses in the report said, we need legislative action to fix this. But if the legislators don't get the report to fix it, how can they? I would like to know why this was put under the table. The pensions. Pennsylvania's pensions are one of the most risky pension funds in the United States. High risk. The Philadelphia Inquiry leads the nation, Pennsylvania leads the nation in the total proportion of alternative private equity, hedge funds, real estate, and other illiquid investments managed by high-fee public managers. Now, every time money comes out of that pot, goes to somewhere else, doesn't that cut down the rate of return? That's just common sense. Now, also it states up there that some of these people were friends of Governor Rendell. The SERS in Washington State are the 2 state pension funds with the highest in alternative investments. Now, what is this terminology? Hedge fund. A hedge fund is an investment vehicle that pulls capital from a number of investors and invests in securities and other instruments. It almost sounds like a mutual fund, doesn't it? Okay? Limited partnerships. Hedge funds are so high risk that they are not regulated by the SEC or FINRA. Now, I have a thought about that. Why would our pension fund, people that run our pension funds, want to be in investments that are not regulated? Does that make sense? Doesn't to me. Give you an example of a hedge fund. Didn't our federal government allow Fannie Mae and Freddie Mac to go into subprime loans? Yeah. Well, when Fannie Mae buys them, where do they get the money from? They actually get it from investment bankers, who takes the loans, pulls them together, and then sells them back to us. Now, the guaranteed mortgage-backed securities was A prime loans. They were the good loans. That was issued all the time. Guaranteed government-backed mortgage securities. What do they do with the ones that are bad? They can't put them in that package because they're high risk. So what they decided to do is start hedge funds, and hedge funds are only sold to sophisticated people. They cannot be sold to the average investor. So they pulled this money together, and as an example, they made these hedge funds and then sold them to pension funds. High risk. What do you think the success of that was? The PSERS history. I want to just touch on a couple issues here. This is not on the screen. Actually, in 1991 was the first time legislators could be on the board. And also in 1994, the PSERS Board of Trustees was given increased authority to invest in what they call prudent investing. Now, what is prudent investing? I got to step back here. The PSERS in 2011 received an award And the award was given out. It was 2011 Large Public Plan of the Year. It was presented to them at an annual hedge fund industry awards banquet. Why do you suppose they got that award? Okay. A little bit more here. I don't know if any of you recognize this gentleman, Anthony Clark. He was the SDRS former chief advisor, and he persuaded the SDRS to put money into what they called Tiger Industry. It was a hedge fund, and they invested $250 million. He got paid fees of $11 million for 1 year and lost $17 million. And they said, that's okay. Venture capital is a financial capital provided by early stage, high potential growth startup companies. Venture capital is investments in companies that do not have a base yet. They're just new startup. They're high risk. Have any of you heard of Solyndra? How did we make out on that one? Okay, that's the kind of investments these are. Private equities. This is in private startup companies. They're not traded on a stock exchange, and they're ultra high risk. Actually, what the pension funds tried to do is make some of this money up. So they took a tremendous amount of money and put it in hedge funds. Now, what's interesting about this, a year and a half ago, I met with a legislator from up in this area, Ryan McKenzie. And I questioned him about this. And he said the reason that they went into high-risk hedge funds is to make up the loss from 2008 and 9. Okay? Well, the pensions were solvent in 2007. Today, they only have 60 cents on every dollar. Now, why did the pensions take a major hit? Because they had too much in hedge funds. Even though he's saying that that's not the way it is. Hedge funds, many times, they have a 220 commission, 2% on the fees of the net asset values, plus a 20% of the products, or the profits, if they make it. Any of you in sales? How would you like to make a 20% profit in sales? Okay? Hedge funds have been written up in many of the magazines. Philadelphia Inquiry, that's just a note on one of them. Our government wants a state, or I should say the board members want to state that hedge funds are such a great deal. But actually Pennsylvania has hedge funds has tens of billions of dollars in them. Interesting with this, the 26.3 billion SERS pension system at one time had 46% of the assets in high risk. I see there's a lot of gray-haired people out here, retired. How many of you would put 46% of your retirement money in something that's high risk and unregulated? Would any of you do that? Okay? This kind of stuff has to be stopped. At one time, they were paying over 400 private equity companies in 1 year. Now, to me, that's theft. The system paid about $1.3 billion in management fees in the last 5 years. And they reported a 5-year annualized rate of return of 3.6%. What did the market do in the last 5 years? If you didn't make 8 or 10, you're not in the game. They made 3.6% after paying 1.35 billion out. That doesn't make any sense to me. Now, is this a problem? Well, I mentioned earlier that Jack Wagner had a problem with it. Okay? Now, I know I have been questioned about this. I know Tom has been questioned about this. Well, was Jack Wagner wrong and they're right? Or is Auditor General De Pasquale correct too? He's got a problem with this. 7.6 billion invested in potentially high-risk, high-cost hedge funds. Out of the 77 billion total in both of them, there's 5.7 billion or 12% in the PSERS and 12% in the PSERS and 7% in the SERS, 1.9 billion. So basically they're playing craps with our money is what they're doing. Hedge funds are an investment alternative often only available to institutes and individuals with significant investment assets. I could see a Warren Buffett. Huh?
George Soros.
George Soros? Yeah. You know, if they want to waste their money and risk their money, that's fine. But you don't risk pension money. De Pasquale wrote a letter about this and says you shouldn't invest in this. So what does the SERS do? September 17th, 2014, they commit another 100 million into these high risks. I had to print this out. This is not in the presentation, but I had to print this one out. Hedge funds are for suckers. Bloomberg News. Now they want to tell us that hedge funds paid better, but according to Bloomberg Business Week, the index funds outperformed the hedge funds by 25%. A lot of this goes back to 2001. You know, when they expanded the pensions and all this information and all that. Well, what was interesting, and I asked Tom if he knew about this, in that agreement, prior to 2001, only 2% of the assets could be invested in hedge funds. Only 2%. So they passed the law, I would assume, because investment bankers lobbied them. I wouldn't say followed the money, would you? Okay. Who got paid off? They took away the ceiling. That's one of the reasons Jack Wagner wrote this report. Now they say they use prudent man law. They're supposed to use the prudent man law, but the prudent man law says and directs trustees to observe how men of prudence, discretion, and intelligence manage their own affairs, not in regard to speculation, but in regard to the permanent disposition of their funds, considering the probable income as well as the probable safety of the capital. Now, is unregistered securities prudent? Not to me. Before we go on to this, the SERS in 1980 had 3 hedge fund managers. By 1989, they were up to 47. From 1990 to 1999, they went from 47 to 116. Now, during that period of time, does anybody want to guess what happened to the rate of return? It went down. Then they went from 116 up to 167. They're just hiring the wrong people, basically. Just flip through this, Tom. This is a list of, as of 2013, all the investment people that they have hired to operate the PSERS pension. Seen enough yet? Interesting, isn't it? Anybody see yet?
Where's the end of this?
Is this insane? 213. 213. Now, I want to give you a quick thought. If you were handling the pensions, knowing what happened in 2008, would you hire companies that had to be bailed out by the federal government? Or would you hire companies that didn't need a bailout? The majority of the big money is going to the companies like Goldman Sachs, JP Morgan, that had to be bailed out. Now, to me, that's insanity. Any of you deal with mutual funds? Huh? Have mutual funds paid well? Compared to banks, yes. Okay, compared to hedge funds, yeah, big time difference if you were invested properly. In fact, hedge funds are doing so bad that this year they expect more hedge funds to close their doors than any time in history. The worst year they had was 2008, and actually 2009, I'm sorry, 2009, and 1,023 hedge funds were totally liquidated. They're on target to beat that this year. Can anybody tell me any one mutual fund that was liquidated and the doors were closed in the history of investing? Not one. There was some bought up, but none of them closed. The schedule of commissions. Oh, there's Merrill Lynch. $816 million in 1 year. UBS Securities, $302 million. I'm not going to read all of them. Goldman Sachs, $298 million. That's for the SERS. Flip to the next one. PSERS, Goldman Sachs, $1.2 million. I want to give you a little thought about this. Earlier I made the statement $1.35 billion was paid in fees over 5 years. That comes out to about $2.7 billion over 10 years. That average is $270 million a year. If that $270 million a year was put in, and I'm going to use the state of Pennsylvania, Vanguard's index fund, instead of giving it to these guys, can anybody guess how much money we'd have more in that account? In the excess of $6 billion. So as far as I'm concerned, that money was stolen from us, the taxpayers, and from the employees. I would like to do what Jack Wagner suggested about the interest swaps. You familiar with the interest swaps that cost us $20 billion? Jack Wagner said what we need to do is sue them and get that money back because they've never given the correct and proper information when they sold them. Can that be done? The answer is yes. The highlighted area up here is risk. 22% in private equities, private debt, venture capital, 13% in real estate, 2% in master limited partnerships, and 4% in other risk. Well, that's 35, that's 41%. Now, my feeling is if they want to play craps with their money, fine. I don't want them to play with ours. You feel the same way? I mean, because of this is why our school taxes are going through the roof. The schools say, we have to make this money up for the pensions. We'll go after the people that lost it, not us. Now, this chart is really interesting because this is the history. Now, these charts that you're looking at here, just so you're aware, this particular chart and ones like this came right from their website. I didn't make these up. These come right from their website. In 1990, if you look at the red and blue, fixed income and U.S. equity. A lot of money there. But if we follow through with that to 1990 or 2000, you take notice how the blue is dropping and the risk is getting greater and greater? This high-risk investing started in 2001 when they allowed the investment bankers to come in and move in. So by 2008 and 9, do we have a lot in U.S. equities? No. Do we have a lot in bonds to protect it? No. This is what caused the major crisis in the pension fund. It was not the underfunding. I'm going to get into that in a minute. It is not the high pensions. It's the corruption in handling these accounts. The public school employees retirement system said the assumed earnings of 7.5% with a 14.9% rate of return for 2013, ending of June 2012. Now, they said they made $7 billion. That's what they're quoting. Now, if an account is worth $50 billion and you made 7, what should be the new value of the account? 57. Their new account value is 53. I want to know what happened to the other $4 billion. You got it. Okay? Now, they also stated that they made 7.5%. I'm going to get back to that one in a minute. PSAR investments, the next page, we're $50 billion short. In the PSERS. We're also $30 billion short in the SCRS because of high-risk investing. Now, could it be, I have to go back to the Pennsylvania company, Vanguard. Now, I'm not promoting Vanguard. I don't have anything to do with Vanguard. But I'm using them as an example. Vanguard handles $1.7 trillion worth of investments. Guess how many offices they have in the United States? 3. The SCRS handles $30 billion. And they have 4, 8, 9, 10, 11, 12, 13, 14. Does that make sense to you? It doesn't to me either. Expenses are way too high. They want to state the annualized 10 and 20-year, there you go, 7.3% through June. in an article that was written to contradict Tom and I, the people that run the SCRS and the PSCRS said, well, we needed to do this to make the higher rate of return. Index funds paid 6.5%. Well, according to Vanguard's audited report, over the last 10 years, they made 8.5. Now, I believe 8.5 is a little bit better than 7.3. Okay? I believe the 8.5 with no fees is a lot better than 7.3 paying a lot of fees, because there's an additional $6 billion missing. PSCRS is the 19th largest state-sponsored pension, $53.3 billion. That is their latest report. Now, we would write one, next one. There we go. Would you agree with me that Warren Buffett has a little bit of knowledge about the investment market? He has at least a little bit. Well, in 10/16 of 2008, Warren Buffett wrote, he said, buy America, buy American. And basically what he was talking about is the Standard & Poor's. Now, from then until now, the Standard & Poor's is up 137%. Remember that number when we get a little bit farther here. Vanguard's record receiving of money last year was actually $164 billion. Put money in the index funds. Okay, now Tom, we had an interview and Tom wants pension reform. Tom wants something done with this corruption. Now what's interesting about this is they had stated, the PSCRS stated, they made $10.5 billion more in returns from 2004 to 2013 than they would have had otherwise. But they paid out $3.8 billion in fees. So their net gain was $6.7 billion. Now, if you take $6.7 billion over 10 years, that's an average income of $670 million a year, right? What did they really make? Do you really believe they made the 7 and 8% they're talking about? That block of money that they're talking about up there would have invested properly would have been $6 billion of additional money. There's a financial rule that's, to me, very important. It's called the Rule of 72. Whatever interest rate you're getting on your money, you divide that into 72. That will tell you how many years it takes for your money to double. So if you're getting 6%, 12 years. If you're getting 8%, 9 years. It's that simple. Let's skip the next two. Okay? Now, if they received 7% over the last 10 years, if you take 2012, go back 10 years, where are we at now? 2002? Okay? Now, if they received 7%, that money in that 10-year period should have done what? Doubled. We have 43 billion. We now have 53. So it went up $10 billion in 10 years, which is $1 billion a year. Divide $1 billion by the 49, what interest rate did you really get? 1%. Now what's interesting about this, The S&P went up 127% during the same period of time. The Dow Jones went up 125%. Being how I am in this business, I went back and looked at how I diversified my clients back then. Not what I'm doing now. How I did it back then, put it in there and left it go, and their accounts went up 137%. So basically what this is stating is, if the money was in proper investments and not high risk, the least that should have happened is the money should have doubled. And now if that money doubled, what kind of pension problem would we have today? None. Now, I want to pull this out because this is the Pennsylvania Municipal Retirement System Report of 2013. Now I want to thank Tom Caltagirone for getting me all these reports. Okay? But their report is a little bit different than the PSCS and the SERS. Since 2009, their investment portfolio went up 142%. From 2009, whoop, can we go back one? From 2009, did ours go up 142%? So why is the difference? High risk up there, index funds here. High commissions up there, almost zero commissions here. That's basically the difference. Because of this, go to the next one. There we go. Again, this comes off of the PSCRS's website, and this is the contribution rate since 1989. And if you look at the blue over here, in 1990, our contribution rate, it was supposed to be 8, was almost 119%. We put twice as much money into these accounts than what we needed to. And we did that from 1990 through 2000. Now, if the account's short, I would like to know what happened to all that extra money that went in there in the 90s when the market was going this way. That increase in that money should have easily offset the years we didn't put in. So I personally would like to know where the money went. I mentioned this earlier. What's happening is school taxes are spiking because of the pension and the pension problem. My belief is we should not be punished for this. We didn't cause this problem. And I believe we need to go after the other legislators to get this done. What happened here is Standard & Poor's. What did they do to our bonds? They reduced them. Why? Pensions. If we go on farther, that's a rating drop. Go ahead and know. There we go. Fiscal, state fiscal condition. Is it good in Pennsylvania? No. It is the pits. We're 37th in solvency. We're 47th in actually cash solvency. Long-term solvency, we're 30th. In other words, we're down at the bottom of the barrel in every different sector of that. Now, why does this happen? My opinion. It's called follow the money. What I find very interesting with this is I hear people say, well, the Republicans get all this money, the Democrats get all this money, but guess what? Both the Democrats and the Republicans in upper office are being paid off. Can anybody guess who was the top recipient in money from the financial industry and the lawyers in 2012? I'm talking about Pennsylvania.
Pileggi. Dominic Pileggi.
Rob McCord. Rob McCord, Joe Scarnati, Dominic Pileggi. Yeah, he's a small fry. And also Damati, Costa. They get a tremendous amount of money. I basically gave you the basics of this. What I'm going to do now is have Tom come up. He'll probably put more together about how this came about, where he stands on this, and what he wants to do about it. And then after that, we will answer any and all your questions.
Thank you, Richard. We got together this past summer. It seems like I have nothing better to do with my time in the summers than to dig into, first of all, it was the property tax issue with Sam Rohr, and I was with him 100%. I'm a Democrat, doesn't matter, Sam, Republican, Berks County. I went down in I say, Sam, I'm going down in the Titanic with you. And we did. We fought the bill. I just wanted to deviate just a little bit about the property tax issue because I know that's near and dear to all of you up here. And I was a co-sponsor both on his bill and Jimmy Cox's bill. I rounded up members to support both bills by friendly persuasion. I'm pretty good at talking to both Democrats and Republicans, and when you have the element of believability and that they trust you, and I think most members that I've dealt with over the years in Harrisburg do trust me. So I was able to convince 39 Democrats and Republicans to get on Jim Cox's bill. And of course, we got slaughtered on the floor because every major organization in the state, be they Democrat or Republican, slaughtered us. We ended up with 59 votes on that property tax bill. We're going to try it again. We haven't given up. So that's just an aside issue. It's like going up a hill and it's just icy and slippery, but we're going to have to dig in a little bit harder. Thank you. And please do what you have to do with your representatives and senators. I'm not going to throw stones at either, D's or R's. It doesn't matter. Votes are votes. But trust me when I tell you, just like the issue that we're working on together, and I'll tell you the rest of the story where this is going to lead. And it's not going to be nice because people are going to end up with black eyes. You need to get more involved with your local state rep or senator. You need to call them. You need to go see them. You need to have a presence there to let your voice be heard. Because I know from being in the legislature and serving, when you hear from more than 2 or 3 or 4 or 5 constituents, all of a sudden that gets your attention. And there's many of you in here, and we have many all across the state. If we want to make these changes vis-a-vis the property tax issue or the pension issue, we've got to do it. And let me just say this about the property tax issue. I keep telling Jimmy, you're Republican and I'm Democrat. I think I am doing a role reversal with you. You're looking at doing something with the front end, raising money, raising additional money through the increase in sales and income tax. I look at the back end, how it's being spent. Bulk purchasing. I put in legislation every session for bulk purchasing for all 500 school districts. This could only save maybe $1.5 to $2 billion a year if we implemented that. One contract for all teachers instead of playing the silly little games about the bidding war with the school boards make those decisions, not us in Harrisburg. Everybody likes to blame us. You elect school directors, they're the ones that do the bargaining, they're the ones that approve the contracts for the teachers. and then they bid the rich against the poor. There should be one contract for teachers statewide. We could save a ton of money by doing that. Healthcare. In Berks County, we did a healthcare commission, and 14 of the 18 school districts and the Berks IU and the Tax Claim Bureau went together, and I used to poke them at this issue. And then one year, it was about 3-4 years ago, I thought, Caltagirone, shut up, sit down and don't say anything. They get irritated when you poke at them with these things. And then they said that they did this, and all of a sudden they said, yeah, we only saved 1.3 million. And I'm thinking, what have I been saying for all these years? It proves the point. When you do an issue like that, how much could we save statewide with 500 school districts? I figure another maybe $1 to $1.5 billion again. And you know, consolidation, you know, there's so many things that could be done that we should be doing. And I keep saying at the back end, we could probably save $4 to $5 billion. And then we could reduce the amount on the front end that Jimmy and others want to do with the income and sales tax. The increase wouldn't have to be that high a bump. And maybe we could sell it. All right, that's enough on that issue. But on the pension issue, we worked for weeks over this past summer. Whatever he wanted, Richard, I got for him in Harrisburg. And I squeezed him a little bit. Give me these damn reports. I know they're around up there somewhere. You never gave me one, but get me one now. Well, they went back. We got them, I guess, for, it was 08, 9, 10, and then 13, and the municipal pension fund for municipal governmental units. It reminds me of Jesse James when I think of the investment bankers in New York. But they're doing it without a gun. They don't need a gun. When you take $1.5 billion over a 5-year period in fees that they've been shaving off the top, you got to say to yourself, what in God's name was going on here? We would not be having this problem. We wouldn't even be talking about this tonight if they would have been doing exactly what Richard has been saying. He hammered it right on the head. Have a meeting set up this coming Wednesday. Tuesday I get sworn in. Well, the entire legislature gets sworn in this coming Tuesday, 12 o'clock in Harrisburg. Wednesday at 10 o'clock, Richard and I set a meeting up with Joe Markosik. He's Democratic Chairman of Appropriations. He sits on PSR's board. And when he's not there, his executive director, Miriam Fox, sits on that board. And we have Gene DePasquale coming, the Auditor General. Gene is with us 100%. He's been saying the same thing Richard's been talking to you about all night, about the risk investments, about the hedge funds, you know, all of these things. Gene has been telling them. Now, we're going to have to craft legislation and undo some of the nonsense that is going on. But we need to have competent, honest board members. Now, let me just tell you the makeup of these boards. There's 11 on the Esser's board, State Employees Retirement. 11. 4 happen to be legislators. I'm not on either of the boards, just to let you know. There's 2 Democrats, 2 Republicans, 2 House, 2 Senate. Who gets to appoint the remainder on the 11 on the state? The governor, except for the state treasurer sits. But the majority on both boards are appointed by whatever governor happens to be in office. Democrat or Republican, doesn't matter. 15 on the state school district employees pension board, 15. So there's 4 from the legislature, but the other 11 basically are appointed by the governor. So who has the majority? The governor. Not the General Assembly, the governor. Be it D or R, no matter. What's interesting is I got into it hot and heavy with my Democratic Chairman of Appropriations, attacking Richard, you know, basically, and I thought, oh boy, we're going to have a little bit of a Donnybrook come next Tuesday, because I'm in league with Richard 100% with what he's saying. I'll be covering his back as he covers mine, because we know we're right. The recommendations were never implemented by Jack Wagner. Never. 46% risk investment. Who in their right mind would be doing that? None of us would. Absolutely none of us. I mean, we're not going to Atlantic City and gambling the house. I mean, that's what, drives me kind of crazy. I'm thinking, where are these people coming from that sit on these boards? The investment bankers raking off at the top more money than we're actually making in these pension funds. Now, they're saying we should have to pay for it, and I agree. I think we need to get the state attorney general to go after them legally and prosecute them for theft, grand theft. We should not be accountable or liable. And let me say this on behalf of the employees, and I don't know if any of you are state employees, school district employees, or retirees. From the very beginning, Richard was showing you, and we talked about this many times, the employees never skipped a beat. 4.5% of the gross, 5.5%, 6.5%, 7.5%. They continuously to put into those pension funds. What happened with the governors, Democrats and Republicans? Well, they thought it was going so good in the early years that they didn't put any money in at all. Nothing. Many of the school districts, mine included, put nothing in. And I kept thinking back on this, well, what were they doing with the money? If the school districts felt that the market was so high, and they did, and it was, what were they doing with our money? Why weren't they reducing our property tax? What were they doing with it? And nobody seems to want to answer that question. The same way with the governors. You got to understand, and I make no bones about this. When you look at the state budget, $29 billion, it's a lot of money. Don't misunderstand me. It's a lot of money. $13 billion in welfare, and there's probably a good percentage of that which is fraud. They just uncovered the one hospital up in this region, just a couple, $200-300 million, that they were overbilling the state. And I'm thinking, doesn't anybody watch what the heck's going on, that these doctors and hospitals overbill, and they present the bill to the state and they write the check and pay them? That's $13 billion. $11 billion into education, and nobody watches what goes on there. I mean, that's $24 billion out of a $29 billion, and then $2 billion for corrections. So that's a good chunk of it. The legislature gets 0.5%, and the courts get 0.5%. So that's 1%. Who gets the other 99%? The governor, be he Democrat or Republican. Does anybody ever watch what goes on with the spending? Just like this problem that we're dealing with here tonight. We deal with so many various issues in the legislature, and then they hide information. You heard what he said about who got the reports. I never got a copy of that report. Only the leaders. And the leaders, as Richard has uncovered, he said, follow the money. Democrat and Republican governors, Democrat and Republican leaders, both House and Senate, major contributions. I'm going to put in a piece of legislation making it illegal for any member to accept money from those investment bankers, and it has to stop. All I want to leave with you tonight, and I'll turn it open to Richard for any questions that you may have. Please, I'm pleading with you. Talk to your legislators. You helped to elect them. They are there to serve you. We're there as your voice in the legislature. But they have to know what your thoughts are. So please, I'm pleading with you. Please make sure when you leave here tonight, just think about what we're saying. You can make the difference, and you are the difference. Thank you.
Is it on? Yeah, Randy Tolman here, Lehigh County.
Yes, sir.
I would like to know how many Republican legislators came alongside of you, Representative Caltagirone. How many?
On this issue?
On
so
this
far?
issue?
None.
None in the Lehigh Valley, none across the state.
This is going to get to be very, very explosive. I'm going to tell you why. You're talking about some very, very, very big money in campaign contributions. I haven't gotten anything. I'll be honest with you. Zero. And I don't want anything from them. Don't misunderstand me when I tell you that. But that's not to say that that doesn't control what goes on with the top brass, the leaders. Because they're the ones that funnel the money down to the rank and file members to help them get elected.
Tell them how much Thursday you got in Benningham. Tell them, right?
It was over $300,000, I
Over
believe.
$300,000.
Yeah, I believe it was over 300,000. And he's probably going to end up being elected speaker on
Absolutely.
Tuesday.
Yeah, finance, insurance, Floyd I received $240,000.
In 1 year?
Yeah, 1 year.
Yeah, 1 year.
You mentioned Rob McCord earlier. Is it also true that our governor-elect as well was aware of this when they worked for the Auditor General's office? Is that true?
Well, yes. Actually, the report that I got that was done by Jack Wagner, I actually received this, not from Tom, but from a senator, Senator Teplitz. Senator Teplitz worked for Jack Wagner. And when I found that out, I wanted to get this report and the one for the Essers from him. If he worked for Jack Wagner, didn't he know about this? And if he did, since he's a senator, why didn't he do something about this? Does that make sense to you all? Now, where was Wolf in that administration when all this was happening? He was the Revenue Secretary. So do you think he should have known about this? Now what I've seen Wolf say is, oh, we need to leave the pensions alone. What we need to do is tax you more. No, we need lower taxes. And stuff like this, the interest swaps, the welfare fraud, has to be fixed. They have to quit stealing our money from us and start doing what's right and work for us. Another question.
How long has Turzai been in office? Do you know?
Too long.
Over 20 years. Let me just read these figures because Richard provided them. And I'll give you the labels behind who they are. Rob McCord, State Treasurer, Democrat, $994,000. Dominic Pileggi was the Republican Majority Leader in the Senate, $735,000. President Pro Temp, Republican of the Senate, Joe Scarnati, $632,000. Jay Costa, Democratic Leader, State Senate, $376,000. Mike Turzay, $329,000. Soon to be Speaker of the House. Democratic Leader in the House, Dermody, $239,000. So, you be the judge.
And that was just from the finance
Yeah.
and the lawyer. That's not the rest of the contributions, that's just them two entities.
I had a question in regards to something Richard said and Tom followed up on. Richard had a nice graph where in the 90s, the state's contribution was very robust, and the stock market was such that, in my recollection, and I sort of held it against him, Governor Ridge looked at that pattern and said, well, let's stop contributing it because we have a growth, we have a robust market, safe investments, right, U.S. and fixed income, and we could stop, we could do the state citizens a favor and stop paying or contributing more and let the market take care of that. Now, Richard, you sort of indicated that if it wasn't for the fees and the risk pattern going up, that would have been fine. That Governor Ridge, and this is one thing I hold against Governor Ridge, so I want to have it cleared up in my mind. You're sort of saying is that Governor Ridge was right, that if that risk portfolio and fees didn't go out of control, Governor Ridge would have been okay. And I might just say, because I think that's a little bit different than what I heard the representatives say.
Well, let me just say,
You know, what happens in good times, and that were good times, I was there. The decision was made by the governor, not the legislature, mind you, the governor, not to put next to nothing into the pension funds. Because you got to remember, the state puts money in each year to the school district pension fund and the state employees pension fund. Now, we cover the state employees, covers the state, that doesn't come from the school district, but then the school district is supposed to put money in also. So it had a tumble salt effect. Since the governor chose not to put any in, the school districts figured, why should we put any in if the state feels that the market's so high and we're making such good money on the return on the investment, then we're going to stop putting money in or very little money in. I think that was the wrong decision by both the state and the school districts, because if they would have continued putting their fair share in, we wouldn't be in the soup that we're in now. What compounded the problem, though, after, and Richard pointed this out with his graphs and charts, with all these different banking investors that they kept multiplying, they had their hands out like this. Everybody was getting a piece. And we were getting shortchanged. For the return on the investment, why in God's name would you pay out such humongous fees for paltry returns? I would have said, no, bye-bye, out of the way, finito. It didn't make sense, and it still to this day doesn't make sense, and they're insisting that they're doing the right thing.
I just want to add a little bit to that, okay? Was Ridge wrong? Yes. Okay? I will not side with him on that. But what Ridge did not cause the collapse of the market in 2007 from 67.2 billion down to where they only have 53 billion today. It was up at 67. That part of it had nothing to do with Ridge. But I agree that Ridge should have never done that. Ridge even questioned the bill about the hikes. He went back to the Republican Party and questioned that, and he got assured that this was fine. What I would like to know is who assured leadership that this was going to work, and who profited from that bill. That's what I'd like to say.
Representative Caltagirone.
Yes, sir.
I'd like to thank you for pledging not to take money from these investment companies.
Never have.
It just occurs to me that it seems like most of our representatives are more interested in getting reelected than they are for doing the right thing for us that they represent. But I have two questions. First, I heard this morning from, I think Scott Armstrong was interviewed, and there might be a window of opportunity when you're installed and before the new governor takes over. But I got a lot of projects on my hands right now, and I really don't have time to. Although the presentation was great, and I think I got the big picture, but I don't really have the exact words that I want to say to my senator and representative. So is there a way, a mechanism that we could, put together some kind of email that would express, basically the opinions? Not that we want to just send the same form letter. That doesn't do any good. But we can call and we can write letters and we can do emails that basically express the points that you're trying to make tonight.
Pension reform means stop gambling with our money.
Is there an HB bill number?
Not yet, no, because we're not really duly constituted until we get sworn in Tuesday. And then only then can you start putting bills in that will actually get numbers. But, you know, Richard hit it on the head so many different times about what's been going on with these pension plans. And, you know, just good common sense would have told you, why would you continue to do the same things over and over and over when you know you're losing money? And you know, the thing that he pointed out to me that really struck me hard was, he said, Tommy, if they would have been doing the right things, both pension funds would have doubled. Now get this, from 25 to maybe 50 billion with the state, and from 50 billion to maybe to 100 billion with the school district. Possible? Oh yeah, it could have, and it probably should have happened. Would there be a problem now? No. But they're trying to make it out to be a problem. We've got to do away with all these pensions, those big pensioners that they're getting. You know, I'm thinking to myself, who created the problem and why is it continuing to exist? Property tax relief, you know, keep it simple. I always believe in keeping it simple. Elimination of the school district property tax. Let's get down to it. That's one. And pension reform. Get the pension issue resolved. If you have to sack all those board members and put in people that have a little bit of intelligence on those two boards, then maybe that's what we need to do. Yes, sir.
Yes, hi. Jim Laverty from Northampton County. First, I want to commend you on making a compelling case about the mismanagement of the pension funds. But I'd also like to add, I think when we talk about pension reform, I personally would like to also make sure there's a discussion about transitioning from defined benefit to defined contribution, because quite honestly, if we had a defined contribution plan, none of the shenanigans would have been able to go on. So I think long-term, I would like, my own opinion, pension reform is initially doing exactly what you two gentlemen are doing, and then in parallel, we need to transition to defined contribution so we get out of all of this gamesmanship.
Yeah, and this mess that we're in right now, it really has to be dealt with. I mean, we can't duck the bullet on this because there's too much at stake. I mean, when you talk about 25 plus billion and 50 plus billion, that's a lot of money. But when you see that they're grabbing 1.3, 1.5 billion in fees in a 4 or 5 year period, you got to say to yourself, well, who's making the money? Yes, sir.
Hi, I'm Frank O'Donnell, and I thank you for your time today. That's something I wouldn't even, you talk about pensions, so what's that all about? Well, I had no clue. We have a big drain going on. One of the things that puzzles me is, in business, wouldn't establishing a relationship with a firm, an investment firm, how does that happen where someone says, oh, just go ahead and do it? I don't understand. That's part one. Is didn't they have any kind of agreement of some kind of vision of what the investment firm, you know, they're saying, this is what we got to make. I want you to do it. And the second part of that, who is minding the store after they gave them the keys to the Volkswagen?
They do have a written report that they're supposed to follow. I have a copy of the SERSs in here and the PSERSs in here. Okay? Do they follow it? No. Why don't they follow it? No oversight. Okay? Now, I want to point something out with this, and that's this. In this report, where Jack Wagner recommended 36 different issues, he sent this to the PSERS and also in the SERS report. They responded with, we don't feel that way, and that takes legislators to pass a law. If you want that done, the legislators need to do that. That is their response. Now, if that is their response, why didn't the legislators get the report? It makes no sense. The PSERS stated we need to have legislation drawn up. It's like when Jack Wagner interviewed the welfare department. Welfare department said, it's not our responsibility to check if it's fraud. Our responsibility is to pay the money. That was their response in the report. Now, personally, I think everybody that stated that to Jack Wagner, their butt should have been fired. Right on the spot. Gone. But I hope that helped answer your question.
Thank you.
A quick one.
Go ahead.
I'd like to address this gentleman's question. And what I can tell you is that we here at Lehigh Valley Tea Party, a number of us on the board, are very, very passionate about this issue. And you will be hearing from us as an organization and receiving instruction and information from us as an organization to help move this issue forward in the legislature. And that's going to include networking with a number of other grassroots organizations across the state to see if we can't all get behind Rep. Caltagirone's legislation.
We got to contact all our friends. This has to.
Yeah. I mean, you know, many laws take many years to get through Harrisburg. Now we're hoping this will move quickly, but I just wanted to let you and others know that we're taking a rather aggressive position on this. I have one question for you, Rep. Caltagirone. The legislation that you plan to introduce, do you know what committee it would go to? Is there any chance of it going to a state government, or would it go to appropriations? Or
It would probably go to finance first, and then to appropriations second.
Okay, thank you.
Yes, sir.
Hello. Hi, my name's John Horvath. I'm from Bethlehem, Northampton County. I own a property for many years, and I've been paying exorbitant school district property taxes, so that the House bill, I believe, is now 76.
It may get a new number in the last session. It was 1776, I believe, and then 76 in the Senate. You got to remember, there's going to be probably companion bills in the House and Senate, one in each chamber, doing away with the property tax.
I actually went on a bus tour to Harrisburg. I want to say it was back in 2012, and it was then labeled as House Bill 1776.
Yes, sir.
And my question is basically, what is it going to be labeled as when it comes back? And is there anything that we the people, or maybe we the Tea Party, could do to help fund a television commercial? Like, if more people knew about this, I tell so many people that I talk with that the way I understand it, they can get rid of the school district property tax and get that money back into the budget just by changing the Pennsylvania state sales tax from 6% up to 7%, just 1 percentage point. That to me is an absolute no-brainer. This needs to happen. I think every single person in Pennsylvania who owns property would not only want to see this happen, but would want to vote out any representatives who vote against it, which comes to my next point. Is there a list somewhere of people who voted against this so that we, the people, can vote against them?
Yeah. Sure. Absolutely.
Sure.
I'm sure, you know.
Has that list been put together? Does that exist? Because I think that should be like out for the public knowledge.
It's on the website. It's on the website. Yeah.
You'd see a
it's
board
on the
member.
website. And just one quick follow-up to your thing about the sales tax. Initially, when they proposed the sales tax, all of the money was supposed to go into education. That's one of the reasons why they were able to get the initial sales tax approved. It started out, I think it was 1 or 2 or 3%, somewhere at that. This goes back a number of years, but the reason they were able to sell it to the legislature and the people was because all the money was supposed to be dedicated. It isn't. I mean, the 6% is not all dedicated to school districts. If it was, you would have no school district property tax. Yes, sir.
I'll make this quick. Every one of those pension funds had fiduciaries who had a legal responsibility to oversee those funds. Is it the intention to identify those people and go after them for the mishandling of those funds?
Actually, that's what I would like to see done, basically for two reasons. Number one, that's what Jack Wagner recommended. That is exactly what he recommended when it came to the pensions and the interest swaps. They were sold a bill of goods, they weren't told the truth, and in both situations, he said the investment bankers should be liable. So do I believe that's what should be done? The answer is yes. And another side of that is this. If this wasn't the state pension, have any of you ever seen articles in the paper where J.P. Morgan was sued? Goldman Sachs were sued because of false information?
Absolutely.
Absolutely. It happens all the time. So if the citizens can sue them for giving false information, not holding up their fiduciary responsibility, why can't the state? It's been done all along.
Ann Mikus from Bethlehem. I agree with you that this is the most important aspect that needs to be reformed. But when I saw in the paper what McCafferty, the judge that resigned, he's getting $11 million a month. That's what it said.
Not 11 million.
No, it did. It said 11 million a month. Okay, or 2 million a month.
Not million. Getting a lot. Not million.
Okay, I'm sorry. It was 11,000 a month. 11,000 a month. I mean, was he a state policeman?
No, he
Or-
served, well, he was a Philadelphia police officer, I think, for
Right.
20 years, and then he was in the
11,000.
municipal, don't you remember, he used to hold the hearings in Eagles locker room, remember?
Common pleas.
Yeah, he was a common police court judge, but he became famous because when disorderly people conducted themselves in a bad way at the Eagles games, he was holding court right there in the stadium, so he became famous for that. So he may have had 20 some years on the bench before he fell off the bench.
And the fact that he fell off the bench, I personally believe his pension should have also fell off the bench. He shouldn't have received one damn penny.
And that was,
He had a payout, quite a big
I
payout.
kind of think that was the decision
Nothing
of the
these guys
Chief
can do about
Justice. Because Seamus was Democrat and Castillo, the chief, was Republican, but he actually made the final decision. Otherwise, he could have sliced his neck and he wouldn't have gotten a pension.
Is anybody going to the press?
About, well, on the pension issue. Oh, we haven't, we did an op-ed piece, and we're sending it to every newspaper organization throughout the state on Tuesday. And Wednesday, we have the meeting with Jack Wagner, and we're also going to try to get a meeting with the Attorney General to follow up on exactly what he said.
But the money that he's being paid was calculated by the retirement system, not the chief of the Supreme Court.
The judges are a different system.
Right, but
They're not really, they're covered by the administrative offices of the Pennsylvania courts. It's separate.
Bottom line, there should be a ceiling on pensions. Okay? You can't take more than 100 grand a year, I don't care what your position is, or more than one pension. That needs to be held back. We can't carry the weight for all this waste. It's impossible. Okay? Is there any more questions?
Thank you, God bless you, and have a good year. Stick together.
Please take this to your legislators. There's handouts in the back. Read them. Go to the legislators. Ask them to join us in this. If they give you a hard time, I've tried this and it gets their attention. If they don't want to join me, what I do in their office is say, play craps with your money, not ours. And they get a set of dice. Get their attention.
Thank you very much, gentlemen. If you would stay up front here, I'm going to call on you for your opinion. Folks, what we do right now is we have our action item. I think we have a couple action items after this presentation. The gentleman on the sides of the aisles in the center are handing out postcards. If you would like to write to your representative, you don't need to know his address, just put his name on it. Put the name of the senator or the representative you want to address your note to. Please print, please try to make it legible, and we will take care of the postage. What I'm going to ask for you, Representative Mr. Shuker, is what short messages on this issue can we put on these postcards?
I know the property tax issue, we're going to deal with it again. Hammer that one. That to me would be number one. That's near and dear to all of us. Elimination of the school district property tax. That's one. And the second one, either pension reform or pension honesty. You know, stop raping the people of this state with high property taxes because you messed up on the pension issue. I mean, pension, they say pension reform. I just think, you know, we ought to say, stop the stealing that's going on. Pension corruption, yeah, that's another issue.
Stop the fraud.
Pension fraud.
Save our homes. Real quick thought. $5 billion a year in welfare fraud. $2 billion a year in interest swap fraud. Tom wants to propose a bill. $3 to $5 billion a year in savings. How much money do we really need for schools if we cut the fraud? They could do it realistically without an increase in any tax or just give us a sales tax or an income tax. They can do it if they stop the fraud.
And they should not be allowed to confiscate a person's personal property because they can't afford to pay these taxes anymore.
We should
100%.
we should never, ever in this country allow a property to be taken because of property tax. That just blows my mind.
Thank you very much, gentlemen. Folks, if you want to fill out these postcards, when you have it done, just hold it up real high. As long as you have the name of the rep, we will get you. We'll put the addresses on for you. We'll put the addresses on for you. Just write down your representative's name, and I'll make sure that the correct address gets on the postcard.
The rep or the senator?
Your representative or your senator in your district.
Pat Brown and moved to somewhere else, so who do we have? Max Cartwright?
If you're in the 15th, you have Charlie Dent. If you're in the 17th, you have Matt Cartwright.
No, that's federal. That's federal.
I think you have, Arlene, I think you have Lisa Boscola.
Senators, I'm sorry.
State senator.
State senator.
It would be Scavella for the Senate, and the lower part of the valley is, at least through Northampton and into Allentown, is Lisa Boscola.
Now on our new website, when you check your name, when you sign in, one of the features that Tom Campione built in there is it's going to tell you who your senator and who your representative is. So get on the website and check that out. Hold your cards up high when you have them done. While the guys are collecting them, I'm going to remind you about next month's meeting. We have a gentleman flying in from Wisconsin on his dime. The organization is the National Motorist Association, if I'm not mistaken. Now, I thought when I first heard the idea, how is that going to fit into limited government, fiscal responsibility? And then I remembered the red light camera issue. Spying. Illegal ticketing. So please come in February. It's going to be a fantastic presentation. Also, remember we're going to have the nominations for the executive board. Bring a friend. All these empty chairs. January is usually a thin month because of holidays, but bring a friend next month and let's fill this room. Now, if I could have all the board members that are available, this is the time that we open the floor for comments and questions to the board. Tony says to pay your dues. If you'd like to be a voting member, that's important. It was an issue last time we brought up a vote. Some people weren't sure how they had to be a member. You have to pay dues and you have to come to 2 meetings in a previous quarter. So if you haven't done that, pick up a form, go online, pay your dues. If you receive the Lehigh Valley Commentator envelope, please bring it up front to me before you leave. Tom, would you go grab that? Just pick up the envelope. Hand that to Otto for me, please. Does anyone have any questions for the board?
I have a
Bob.
suggestion regarding tonight.
Hold on a second. Bring your microphone.
Yes,
Yes. First of all, I just want to thank the Lehigh Valley Tea Party for educating me about the pension problem. It was in year 1 or 2, they had some speakers here, and they termed it the pension bomb that was coming, which was a great term. I had not heard about the issue before. And for the board, these gentlemen did an excellent job, not only here tonight, but on Gunther Walsh's WAEB radio show. And the link to that 20-minute broadcast is on the show's website, on the station's website. You could pull that link and share it with your members on your own Tea Party website. I'm going to suggest that as a board. And as Gunther said after the show,